Hey, it's Tom here and welcome back to the channel. So massive news out of Charlie Munger and the Daily Journal Corporation just today, and that is that Charlie Munger has added to his Alibaba position quite significantly. Now, Charlie Munger was the first really big super investor that really caught my attention when he bought into Alibaba in the first quarter of 2021. I'd been following the Daily Journal Corporation's 13F filings every single quarter for quite a while, but as I was doing that, there wasn't really much to write home about. Charlie Munger actually hadn't made a transaction that would show up in those 13Fs since about 2009 when I started looking at them. So when we saw Alibaba turn up in the first quarter of 2021, that caught a lot of people's attention. So in this video, I want to give you some of the finer details on that purchase from Charlie Munger. We can't see exact prices or anything, but we can see the price range that the shares traded for during the quarter in which Charlie Munger added to his Alibaba position. So we'll talk through that. I'll give you the number of shares or ADRs that Charlie Munger bought in that stock. I also want to just recap some of the recent issues that really have been sending the stock down for Alibaba, and also give you some of my sort of updated intrinsic value estimates as well. But before we get into that, we do have a sponsor for today's video, and today's sponsor is Sharesight. Now, I must say that as an investor in the stock market, there is a lot of free information out there and a lot of free tools. So there are very few services that I really pay for. I have some different brokers that I use, and I also use Sharesight. So I really use Sharesight for a couple of main reasons. The main one's really been that it allows me to track my portfolio in a lot of detail. So with each of my holdings and on an overall portfolio basis, I can see how much of my returns are coming from capital gains, how much coming from dividends, and how much are coming from fluctuations in foreign currencies. With me being here in New Zealand and purchasing Australian and US stocks, that is really important to try and understand. And I also use it at tax time, so it allows me to easily extract a couple of main reports that I can ship off to my accountant, and it just makes tax time really, really easy. I don't have to battle with spreadsheets or go through the history of all the transactions I've had with each of my different brokerage accounts. I can just give that information straight to my accountant, and that's kind of job done from my perspective. So those are a couple of the main reasons that I really enjoy using Sharesight. It also integrates with the brokers that I use, so anytime I do make a change in my portfolio, I can log into Sharesight and those portfolio changes have already turned up. There's no kind of manual entry for me for the most part. It picks up any dividend payments and dividend reinvestment plans that I have as well. So if you're interested in checking out Sharesight, you will need to go to the link sharesight.com/investingwithtom. Sharesight does actually have a free version that you can use for as long as you want. It does have some limits on how many holdings you can set up and what reports you can actually see, but if you want to sign up for one of the premium kind of paid subscriptions, using that link will get you 4 months free off of an annual subscription. Okay, so let's jump straight into the news from Charlie Munger and the Daily Journal Corporation. So just as a bit of a recap, we first saw Alibaba shares, or ADRs I should say, show up in the Daily Journal Corporation's portfolio in the first quarter of 2021. And in that quarter, we saw a purchase of 165,302 ADRs into that portfolio. And if we kind of look at the price range throughout that first quarter, the price fluctuated anywhere between, at the absolute peak, about $270 and at the absolute low, probably about $220. So most of the estimates floating around were saying that, perhaps Charlie Munger bought at about $250 per ADR for Alibaba, and he's kind of been quiet ever since. So we saw that initial big purchase in first quarter of 2021. We saw no change in the second quarter of 2021, and we've just had an early 13F filing show up for the third quarter of 2021, and there were most certainly some changes in that one. So if you have been following Alibaba closely, you will know that the stock is down quite substantially. And even though Charlie Munger was buying at $250 a share, which he clearly thought was a good deal at the time, the stock has continued to drop a lot. We saw a lot of super investors like Munger and Guy Spear and Bill Miller and countless others kind of continue buying Alibaba as it got into sort of the $230 and $220 and $210 and $200 range, and it's continued to go all the way down to a low of in the $140 range. So Charlie Munger has clearly seen that price drop, and he has added quite substantially to his position. So like I said earlier, he already owned about 165,000 ADRs. He bought an additional 136,740. So that's about an 80% or so increase in his holding in terms of share count. Obviously, the price has come down quite a bit, so it's not as big an increase in the amount of dollars that he has kind of sunk into Alibaba, but nonetheless, that is a really substantial move in his Alibaba position. And after that purchase and at current prices, Alibaba now makes up not quite 20% of the Daily Journal Corporation's US portfolio. I say US because I know that the Daily Journal Corporation does own some overseas positions. I know they certainly own BYD over in China. It's been rumored that they maybe own some other positions as well, but I don't know that for sure. But of the US portfolio at least, it's about a 20% position now for Charlie Munger. And there certainly have been some changes and some issues with Alibaba. Stock doesn't really go down 50% just for no reason. And I want to recap at a high level at least some of the things that are going on with Alibaba. Munger clearly thinks that even given that all those issues kind of exist, he thinks the odds are kind of stacked in your favor at current prices is what I'm kind of gathering from this recent activity from him. But nonetheless, I just want to give a bit of a recap on kind of what's going on and what has sent the price down so much, and give you kind of my view on it and my estimate of where intrinsic value kind of sits and what I think Alibaba is actually worth. Now, when it comes to Alibaba, you have an absolute beast of a business, frankly. So you have a huge e-commerce business. Some of the numbers that come out of Alibaba are just insane. It will blow your mind, the amount of sales volume that these e-commerce businesses have within Alibaba, the big ones being Taobao and Tmall. They also have several subsidiaries. They have a large number of subsidiaries. Really, the big ones would be Ant Group, so they own a 1/3 stake in Ant Group, and the one that also is getting a lot of attention from really bullish investors in Alibaba is also the cloud business. So the cloud business has about 40% market share in China. It's still much smaller than the US counterparts, so it's less than about a fifth of the size of Amazon Web Services. So there's certainly still a long runway for growth in that particular business, and it has been growing at about 50% a year over the last handful of years, and it's really only just reaching profitability. So it's not really contributing any free cash flow to the business just yet, but it looks like a likely candidate to do that moving forward. So even though the business of Alibaba is really spectacular, there have been kind of three main issues hanging over the top of Alibaba's stock. And those have been basically the VIE structure, so variable interest entity. Basically, if you buy into Alibaba stock in the US, you might notice that I've been saying ADR rather than shares throughout this video. That's because you're not buying traditional shares like you would in a US listed company. You're actually buying into a variable interest entity in the Cayman Islands, and that variable interest entity basically has contracts for the profits of Alibaba's real businesses in China. So that has been in place ever since Alibaba was public. It's been around for a long time, but I guess it's been catching a lot more attention in recent times, and with some recent, regulations and crackdowns in various kind of areas of tech in China, it has got some people kind of worried about whether there may be a crackdown on that particular structure. And that VIE structure was put in place because, in theory at least, with some of these kind of key assets in China, the Chinese government didn't want foreign ownership of those assets. Now with Ant Group, that is basically a really fast-growing financial services business that Alibaba owns a 1/3 stake in. Kind of lumped into Ant Group is also Alipay, which is extremely widely used in China for, as a kind of a payments app. And it's been one of the core drivers of Alibaba's e-commerce business for long-term growth as well. Now, one of the crackdowns with Ant recently is, firstly, they were meant to have an IPO not all that long ago, which was put on hold. And there's also been some kind of extra capital requirements for that business as well. So Ant used to kind of be like a connector between someone who wanted to issue a loan and someone who wanted to borrow money. They used to kind of connect those people together and collect a fee along the way. So they weren't doing a lot of, I guess, lending themselves. There's been some changes so that Ant now have to put up some of that capital and actually back some of the loans themselves. So it's made it a slightly more capital intensive business and certainly will slow the growth for Ant Financial, but it's still an absolute like powerhouse financial services business and is certainly worth a lot of money. And finally, the other thing that kind of is hanging over the stock, I would say recently, is this donation or pledge or whatever you want to call it that not only Alibaba but also Tencent, and I haven't followed too many businesses outside of that in China, but I suspect there's going to be more to follow. Those businesses have basically been making donations towards what they call common prosperity in China. And I put a tweet kind of up on Twitter the other day explaining kind of my view of where Alibaba's at the moment. I'll talk about intrinsic value shortly, but I'm basically getting to the point now where I think that the intrinsic value of Alibaba is a lot higher than the price, but there really are a couple of things that you need to kind of get your head around and a couple of hurdles you need to get over before I think that you can be comfortable investing in something like Alibaba. Now, one is the VIE structure, and bullish investors in Alibaba will argue that that VIE structure is basically required because Chinese businesses need foreign investment, they need foreign capital because there's not enough capital in China to fuel the growth that they want to try and achieve. So that's kind of the first thing I think that you need to get your head around. And the second thing is these pledges and these donations. If Alibaba are just forced to donate all of their profits to common prosperity forever, and the shareholders of Alibaba never actually receive any of the profits that the business produces, then the intrinsic value of that business is zero. If a business never makes any money, it's not worth anything. And that is certainly the other thing that, from my perspective, you really need to get across the line with. And I don't think there's a particularly easy answer on either of those two big hurdles that I've got in my head at the moment. But there's some of the things I continue to study and try to get my head around. And clearly Charlie Munger is very positive on this whole thing, and he thinks that Alibaba can work through some of these issues. So he's continued to buy it along with many other super investors that have bought it also and have kind of followed Charlie Munger into this investment. So finally, I just want to talk very briefly on intrinsic value. I've shared this info in kind of a couple of videos before, but I'm just going to give a bit of an update. I really haven't changed a lot of my assumptions or any of my assumptions really since I last did an intrinsic value update, but I just want to, I guess, talk through again some of my current thoughts on the whole thing. So like I mentioned earlier, Alibaba is a collection of various businesses. The core of the business being e-commerce, but they also have, the 1/3 stake in Ant Group. They actually have quite a bit of net cash on their books at the moment as well. And they also have this very fast growing cloud business amongst various other investments. Now, when it comes to Ant Group, that is something that is certainly going through a lot of changes at the moment, and I really don't feel comfortable trying to put a value on Ant Group. It was rumored to be IPOing at like $300 billion US, making Alibaba's stake worth $100 billion US. But that IPO fell over. I think there's been a lot of very real changes in that business that will bring the valuation down. And I'm really just not comfortable kind of putting a number on that. So when it comes to trying to figure out intrinsic value for Alibaba, I've really just stuck basically purely to the e-commerce business because that is something I think I can get my head around. Even the cloud business, yes, there's cloud counterparts in the US that we can look at, but it's really tricky to see what level of profitability the cloud business is going to be able to get to because it's not profitable yet and it hasn't got kind of enough scale, I don't think, for us to get a really good feel for what future margins and so on are likely to look like. But like I say, I think you can make a pretty good attempt at valuing the e-commerce business. It's much more mature they've actually come out and published some very clear targets that they want to achieve. They want to reach 2 billion customers or annual active customers by 2036, which is about a double from today. There's also some pretty good data you can look up on what the growth in spending per customer has done historically over time. And I've done videos on this topic called, how large can Alibaba grow, to try and figure out, from those numbers, what do we think an annual compounded growth rate can look like for Alibaba's e-commerce business. And I landed in sort of the low to mid kind of teens for that. I think there's a chance they can do a lot more, particularly if you factor in these other businesses. But if we're focusing purely just on e-commerce, I think they can probably grow the free cash flow for that business somewhere maybe 13, 14, 15% a year. So if we put those through like a discounted cash flow and try to understand what the present value of future cash flows look like, or the intrinsic value looks like for Alibaba, I'm landing anywhere from maybe 700 to 800 billion US dollars, which in per share or per ADR terms is about $260 to $290. And again, the Ant Group stake, the cloud business, and all of the other subsidiaries for Alibaba are kind of cream on top with this in terms of future growth and cash flow and so on. So I can really start to understand why some of these super investors, including Charlie Munger, are willing to kind of take the bet and swing at this particular pitch. There's certainly some hair on it, I guess, and some things you need to be well aware of. Every investment has a set of risks, and Alibaba is no exception to that. But nonetheless, it is really interesting to kind of follow along with what these super investors are doing, and no doubt it will be a very, very interesting case study to look back on maybe 5 or 10 years from today. So that's it for me for this one, and that is some of the recent news out of Charlie Munger and the Daily Journal Corporation. I do hope you enjoyed the video. If you did, please hit like and hit subscribe. If you're interested in the Sharesight offer, you will need to go to the link sharesight.com/investingwithtom. But that is it for me for this video, and I will see you in the next one. Cheers.